I've always gone the route of taking action first and kind of figuring it all out after. People want these perfect things in their head before they start going to take action. I think you learn so much more by trial and error and having conversations with real people versus doing all this knowledge intake without actually taking action. Action beats education all day long.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henty. Welcome back to The Path to Wealth. Today we have Sam Silverman with Silverman Capital. He manages assets in Arizona, Texas, Florida, and Colorado. He has over 4,000 units under management, and he's building different levels of funds right now. So we're going to dive in later today. And I'm just looking forward to this conversation because he has a lot of experience in different assets like mobile home and short-term rentals. So we're going to dive into that. And welcome to the show, Sam.
Yeah, thanks for having me on. I appreciate it.
So maybe give us a little bit of a background. Where are you coming from and how did you get into real estate?
So kind of my background's always been in some level of entrepreneurship or sales or some function. So kind of going way back to high school, actually built and sold a company around event planning, right? So that's my first experience with sales and kind of managing sales orgs, right? I had a team of 50 people, of students from different areas selling tickets to events.
And you sold that in high school?
Yeah, I sold it my sophomore year of high school, actually paid my way through college with that money. So I've always been on the entrepreneurial and kind of sales side. From there, got into tech sales out of college. And in tech, you can have a really quick path of if you perform well, you're compensated very well for it, right? So I always understood the concept of passive income, right? My kind of take on it was you're trading either your time or your money for more money, right? You can earn it in two ways, one being sweat equity, right? And one being actually buying it. And kind of started like most people do and started buying up single family houses and got a portfolio of, I think, about 10 houses and realized it was just something I never wanted to do ever again in terms of being involved with the traditional, buy a long-term rental, get a tenant in there, put them on a 12-month lease, and then just wait. And it was not as passive as I thought it would be. Even with property managers owning, kind of managing the assets, it was in nowhere near passive. And something I realized quickly was that I'm far better off in my field of work spending more time in that field of work, right? It's not a career in which you have a salary. You have a salary, but it's not in the sense, that's not really what you make or what you earn, right? In performance, you're paid 2, 3, 4x what your variable component of your compensation is if you perform well. So what I realized is that it wasn't worth my trade-off of time to be spending time going through the acquisitions process, the loan process, and you've done those loans, know they are a complete look under the hood of your life, going through a single family home purchase. So just the time being spent wasn't worth the trade-off I had in my day job. So kind of from there, started investing passively, right? I listened to podcasts like this and others where I found a few folks to invest with, wrote a few checks for 50 grand in multifamily. Those started going well, started aggressively selling off my houses and pumping more cash into deals like that. So in the last few years, it's just all I've been doing is just investing passively into deals. I want to spend 35, give or take, different private placements. It's all I invest in at this point personally, and realized there was two areas of need when you look at a deal like that. One being finding the deal, and kind of based on my time constraints with having a day job still, that wasn't the area which I was going to focus on. The other one being finding capital to go help fund those deals and telling that story to investors. And I think being someone who all they invest in now is deals like this, I think that storyline to investors and kind of the relatability helps quite a bit. And kind of tapping back into that network and sales background of myself to kind of grow the capital raising business itself.
So where did that entrepreneurial spirit come from that you already explored it in high school? Is that something your parents kind of gave you on the way, or where was that nurtured in your life?
I think it was more nurtured out of need. If I wasn't funding a lot of things I was doing, they weren't being funded. So it more so came out of need of situation and kind of forced that creativity versus it being truly kind of nurtured to you, right? I'd say it's kind of a product of your environment versus anything else. No, I'm definitely kind of grateful for being put in those situations where you have to go fend for yourself in certain ways, right? Where it makes you a lot more creative and kind of figuring out different things you can go do to be self-sufficient, right? Versus relying on others.
Yeah. So you were very aware that if you wanted to go to college, you have to take care of that yourself. And did you really think that the business you were building would help you do that? Or was that more a stint of, okay, I would like to build that business, but then maybe I have to pick up work later? Or did you have that exit strategy in mind?
I didn't think that far ahead at all. Like, if we're being totally honest, there was not that thought process ahead. It was more so like, this is an angle in which we can go take advantage of right now. This is an area we have room to grow in. And it kind of grew to a point where it opened up options, right? I think this kind of ties to a lot of things, entrepreneurship or business wise, is that everyone can have this grand plan of what they want to do, but being opportunistic for what's in front of you, opportunity wise or situation wise or kind of resource wise, what you have, use that, right? Like, be open minded to what those things are, because you'll kind of figure out a lot of things that time makes more sense for you or whatever it may be. It's being open minded and opportunistic as to your options you have in front of you.
I heard Ray Dalio say that he is an accidental billionaire and that he never meant to accomplish that much. So it's interesting how life leads you. Would you have ever thought that you would be in the position where you are right now, attracting capital, building funds that actually invest into those large multifamily and also storage unit acquisitions?
Not necessarily. I think it was more so I knew I wanted to do something along the lines that was working for myself. And it was more so kind of biding time until you figure out what that thing is, right? And to me, kind of what my end game always was figure out something that you're compensated accordingly to the challenge you're taking on, the production you have. Like, I am all for production-based compensation in every facet of the world, right? Like, I think salaries are what people give you to kind of start sacrificing everything else. And it's nice too, because it kind of holds people and yourself accountable. Like, I have a huge issue with competency just with working with people, right? Like, I have a very, very low patience for people who are incompetent, for better or for worse, right? So I think this field actually aligned really well to that, where you can hold yourself to a standard, you're compensated based on the actual work you do versus just being compensated for showing up. So I think this actually fit really well with what I was doing. And if you also look at your competition in the financial services space, you have these financial advisors sending copy and paste messages on LinkedIn, which are freaking terrible. You've got the franchise consultants sending copy and paste messages on LinkedIn, which are god awful, right? So like, your competition as to who's out there, if you can take some level of, tech sales background prospecting to it, it's very, very low, right? Like, your level of effort needs to be good and stand out is not that high versus what other people are doing today. So I think when people get this, belief in their head they have to do things perfectly, you really don't, right? Like, if you're genuine and transparent and ethical with how you operate and find good partnerships that you vet thoroughly, and you're better than everyone else, you don't have to be perfect. You just be better than what everyone else is offering.
I think it's Tony Robbins who likes to say, to stand out, you just have to be an inch taller, not a foot.
Yeah. And that's like my big thing now too, is like, people want these perfect things in their head before they start going to take action. Like, I've always gone the route of taking action first and kind of figuring it all out after. And, kind of like to use the analogy, right? Say you're learning a new concept, and a 1 is you have no idea about anything in this concept. A 10 is you are a complete master, you know it perfectly. Most people will need to be a 7, 8, maybe a 9 before they feel comfortable pitching it to someone. I have no problem being a 2 or a 3 and figuring out the rest along the way. And I think you learn so much more by trial and error and having conversations with real people versus doing all this knowledge intake without actually taking action. To me, the person who's a 2 or a 3, like, outside of fields like medical fields, right? Like, if you're a surgeon, you better fucking know that, right? Like, if you're doing things like outside of that's legitimate life and death, surgeon, pilot, doctor, like, things are legitimately life and death if you fuck up. Outside of that, like, action beats education all day long.
But if you're handling someone's capital and those are like maybe their life savings, and those might be in a reserve for medical treatments in the future. So even as somebody who handles someone else's capital, it might actually be like life or death situation.
Sure. And I think part of that you can get away without the education piece on. So 1, there's still education value to it, right? But 2, it's more so kind of like, if you look at my vetting process for operators, the first thing I do with them is write them a 6-figure check of my own money, right? Yeah. My own money goes to before I ever partner with someone in a deal. Second, we do background checks, right? We get references, right? So in terms of, the people might be able to speak things when I was first starting at better than I can, sure. Are there people who are more thorough and thoughtful, but how they place other people's capital? No shot. So I think that's the difference, is that, yeah, I may not have known every single freaking term, but did I do whatever I could out of my pocket to make sure that the due diligence was done for someone to place their capital there? 100%.
So, what was the language used at home around money? Maybe your uncles or your parents or generally the family. What were the beliefs around money?
For me, kind of growing up, what I realized, I think parents show you a few things, right? What you do, want out of life, and what you may not want out of life. And I think for me, what I saw was I didn't want money to be a blocker or an issue, right? I think if you kind of remove that barrier of finances being an issue or causing problems, you have a lot less shit to go fight about, right? So like if you can kind of remove that block of how are we paying for something, right? Like to me, what I've always wanted is the stability, and also just the money doesn't impact your decisions, right? You do things because it's what you want to do. You spend time with who you want to because it's who you want to spend time with, right? So if you kind of remove that barrier of money to it, that was always kind of what I grew up with, is how do you remove that barrier of finances from your decision making?
Were you able to actually remove it? Because I feel like no matter at what level, there's always some financial barrier to it. It's just the next level of it.
So there's different levels of financial barriers, I think the ones that there's different levels of freedom to it. So I think personally, kind of I've always had the goal of just you do what you want to, when you want to, with who you want to do it with, right? And those, just the money doesn't really matter. Not that it doesn't matter, but it removes itself from the equation. So that's going to always been a driver of myself getting to that point, is that I don't want to make decisions on how I live my life based on certain dollar amounts, right? I think you have different levels of financial focus, right, as to what level of luxury you can go live in. But I think the biggest concern for me was always just getting that decision where the everyday life is not tied to certain dollar amounts.
Then how was that progression or development for yourself? Did you start reading books? Is it something that you were exposed to in high school? Did you have a mentor? How was your personal journey in actually changing that money mindset from what you might have learned around home or in your upbringing towards where you are today?
So I think it ties to a few areas, right? One, in high school, I had a baseball scholarship to a very prestigious private school, a prep school, where you look at the graduating class, right? I was in a full scholarship there. This school was probably $40,000 a year for high school. I had a full baseball ride there, so it wasn't, financially, it's not a school like I could have gone to myself without that. But being in a place like that environment, of my graduating class, there were 100 and change kids, 120 maybe. Of those 120, 4 of their parents were on the Forbes 400. So you're exposed to such wealth and such just how like people think and how people speak. Right, you're in New York, right? You see it on a daily basis. You have to go out of your way not to walk into someone who is, worth 8 figures plus. Like you walk in the street, you see tons of them, just because you have to have that level of affluence in a place like that. I think I was surrounded by it really young, and I was always someone who loved numbers, right? And you kind of start seeing, okay, if I can do this by this age, I can have that, right? I was very big on pacing. I have certain net worth goals, income goals by certain ages, right, for myself. So I think it kind of ties back to the sales background, right, where it was unlimited, uncapped compensation. It's always capped in a way, not actually comp plan wise, and more so we can actually go achieve in that given time window. So I saw it really quickly as to if you do more in the right environment, you're compensated a lot more for your work. And not necessarily, it wasn't work that I loved doing, but it was a clear path of getting to a place that would allow me to go work for myself eventually. I hadn't figured out what I wanted to do at that point just yet.
Yeah, I guess the one constraint at the end of the day is always time on top of, even if the extra compensation might not be capped, there's only so many people you can talk to in any given day. Unless you build a team.
Yeah. In certain areas there's room for it. But yeah, I think a big thing you kind of realize too is that you have to you figure out what those skills are you have really well, right? Like what things can you do exceptionally well, and then how can you go double down on those? Like I'm not a big believer in fixing your weaknesses by any means, right? Like people want to go be a jack of all trades, which I think is one of the most useless things there is in the entire world. And the reason I say that is that you take any profession, right? Say a barber, say a freaking landscaper. If you are the best person at doing that, you're making millions of dollars a year doing that trade. But if you're not that best person in a field that may not be the highest paid, you're not making anywhere near that. So to me, what I realized is like, I'd rather go very, very deep in a few key areas versus very wide. So it was more so just kind of spending time doing, figuring out what those competencies were. And then, okay, now that I have those competencies, what are the positions I put myself in that have the most upside in those competencies that I can go do.
So how did you identify those competencies? Because many of the things that we might feel we're very good at, they might be so natural to us that we're not even considering them as something that someone else is struggling with.
So I think self-awareness is like just one of the biggest things in life to understand where you fall in certain things, like being very realistic as to who you are and what you're good at, right? So for me, I always do numbers, right? Numbers were always a strong suit. Specifically applying numbers to dollars, right? Algebra, that side of it, not so great. But like tying numbers to dollars in financial situations, I was excellent doing that. I could do it in my head. And then the other side of it too was kind of in sales, you have, especially if you're leading teams, you have different types of people in which report to you. And you want the same objective from them, and you have to get it in different ways. Something I got a lot of experience in was how do you align to certain people who think very differently, right? Take the sales rep who is very financially motivated. It is very, very easy to go say, hey, if you do this, you'll earn that, right? Very simple plan to build for them. But it's the person who is motivated in different ways, not financially, that you need to be able to keep bought in for a long period of time. So I think that kind of exposed me to, I think just sales, raising capital, it's a big psychology play, right? How well do you understand people? So it's figuring out who do you align to, right? Who can you go spend time with and relate to? And then how can you create some level of empathy with them, right? From kind of understanding where they're coming from, and then also making recommendations that make sense to them. So for me, it was always the people side of it, and it was always the numbers side of it, and then it was also just the work ethic side of it. Like I don't mind the 100-hour weeks of having 2 full-time jobs, right? Most people barely even do 1 job. Right. So like I have no issue putting that work in ahead of time, and I can understand like I can view things in sprints and complete those sprints very efficiently. Where most people want to be handheld and coach through things, like the ability of, I think one thing that if you want to like simplify it, it's like put yourself in a situation, will you figure it out? If you can go figure things out in situations which you don't have like an instruction manual to, you'll do very well in most things that you try and go do.
Yeah, I also always feel like I'm someone who can figure things out. My belief is that if you drop me in any country in the world, after some time, I'll figure out the landscape of how things are working, and I'll manage to be in a good place. That's like my general belief.
That's huge. Like figured out ability. Like when we're hiring sales reps, we're hiring people in previous companies. If you have someone who will figure shit out, I'll bet on them versus someone who's been in the industry for a while every single time. Like I think a big thing too, just kind of in personal background, like you look at areas which you need to be good at, is picking the right people. Like the gut instinct matters a ton with who you work with, especially in this line of business, right? Allocating capital. Essentially what you're doing is you're betting on the right horse and jockey to go perform well. And your reputation is directly tied to theirs. So picking the right people in terms of how you vet them is a massive skill that you need to go have in this field.
So how do you go about vetting those operators that you're placing the capital with? What are like the couple of top of the list items where you can't make any compromises?
It's the people first and foremost, right? It's the people. Second, in that group of people is what do they give up or what risk they have in this deal? And funny enough, the biggest risk that good operators have is not financial, right? It's reputation. People who have been there, done that, they're facing the public, right? They can't go hide from gaps, right? For them, you think about just like say a multifamily deal. They have one deal, right? Say for example, they have one deal out there that they're working on right now. But they've done 30 deals in the past. There's way more dollars tied to their overall business than that single deal. And I don't mean dollars in other deals. I mean future projections based on deals that they will and can do. And what I mean by that is that if someone has a deal go south, or if they act unethical or non-transparent, those risks to their business matter far more than weaseling someone out of $100,000, right? Like their business value is much more than that, that there's very little risk both in their ethical, their transparency, and also too, like you want to see that this deal, that they don't need this deal to be financially stable, right? Say you're doing a deal and I'm raising capital for one of your projects, but this is your lifeline, right? I will never do a deal like that because you may need to pull money from the deal to go live off of, right? There's just things that may make you emotional that impact the business of how it operates. So I want to see a level of stability. I want to see a level of track record. I want to see a level of skin in the game risk-wise, right? They've given something up to go do this, right? They have a brand around this to go support it. And then, right, obviously things that matter too is what markets are they in? Is the market that I firmly believe has demographics to do well, right? Looking at, job growth, population growth, income growth, companies moving there. Are there laws that allow them to operate freely in that area? Is the market marketable, right? Like I see deals all the time in the Northeast for multifamily. I just can't do those deals, right? And not saying they're not great deals. I can't go sell that deal. So it has to be a good deal market-wise to perform, but also a sellable deal for you to go market too. What else? I mean, honestly, the biggest thing, so like just to be totally transparent, I manage my mom's money, right? Like her retirement account, all like what she lives off of. So if I talk to someone and my gut tells me not to put my mom's money there ever, like if I wouldn't feel good about that, I'm not working with them. Like as simple as it sounds, all these numbers you look at and equations you look at, but if they don't pass the gut test, like no shot.
I fully agree on that. And I had one business partnership here in New York City, which they didn't pass the gut check. But back then I was like, okay, maybe that's what it takes in New York. It was one of my first businesses that I started, and I didn't have the exposure to opportunity yet that I have now. And it didn't turn out well. And I was like, wow, this was like a real lesson. And it's now it turned into one of the most valuable lessons in my life early on. So I'm very happy it happened, but it was a painful time that took a lot of reflection.
Yeah, and it's important to like have those experiences early will give you a lot more clarity on what you want your life to look like, right? I think a lot of the reasons people like us do kind of these businesses is that it's the freedom piece of it, right? And freedom is not just in time. It's also in like, can you sleep at night with what you're doing, right? Where you think about it from the standpoint of, I'd rather make less money on a deal, the better operator, because one, the experience is better, you'll get referrals, people will reinvest, but more importantly, it's just, you're not gonna have something that takes you to business. Like to me in real estate, if you can hang around long enough, you'll become rich by accident and like wealthy by accident. Where if you can just hang around, so what I like looking at is, what's the chance this puts me in a business, right? Like I'm okay making less versus the alternative of taking a risk that can wipe you out reputation and cash wise. So to me, I'm okay making a little less, work with better people, because I can make it up in volume, right? I can make it up in experience, having referrals and repeat investments, right? And then also I know that there are people, if I give my capital to them and my investors' capital to them, I won't think twice about it in the sense of, is it in the right place? So that to me is worth more than compensation you can give at times.
So how did you originally go about attracting your first capital to actually go out and deploy it? What were those steps for you? And was it natural to you because you're actually in sales, or did you first kind of try to tie in not only your mom's money, but maybe friends and family?
So I had, before a single close friend or family member invested in me, I had over $15 million raised from retail investors. So no, they did not help in any way. And I didn't even ask in any way beforehand too, for the reason that you kind of want to prove that you can do things on your own. One, my family doesn't have much money to give anyway. But two, you want to prove you can do things on your own first. So my first deal, I had $1 million raise that I had 10 days to go complete with 10 days to funding, with no investor list, right? Starting from scratch. I made probably 450 plus calls that week to people I knew or had briefly spoken with beforehand, had some kind of existing relationship, but not too much, right? So I made a ton of calls that week to people that I knew. Finished the raise, awful experience. I don't recommend anyone kind of taking on that burden for your first raise again, especially with no investor list. But what it did was it built up massive pipeline for the future. And what I mean by that is that, say I reach out to you, I'm like, hey, with this great deal, you and I know each other, we have that relationship already. And you're like, hey, this is a great deal. We've shared a 50 grand if you want to put some money into it. having 50 grand liquid or having liquidity, right? People in real estate investing know this firsthand, is that you can be very wealthy and be cash broke, right? Or be very illiquid. So not only was it do they want to invest? It's, can they invest right now in this given time period, in this tight window?
Yeah, within a week,
I kind of ran into the most. Yeah. So what it did was it built up, like now that raise, an email goes out and that raise is done, right? But before, the amount of work you had to go put into it built so much future pipeline for people who were interested but didn't have that liquidity, didn't have the timeline, want to see a few more deals come through. So actually that kind of heavier lift up front set me up very well for kind of the snowball effect going forward, right? Those people I called, say only got 15, 20 of them to actually go invest. Right now, of that 450, I'm sure 50 plus have invested in this period of time, right? So it's built future pipeline for yourself for kind of taking on that big burden up front. Yeah.
And I guess you had that added benefit. Not only did you put in the work, making so many calls in 1 week, but you also were able to show them that you actually closed it despite the challenge of time constraints. So all of those, let's say, 300 or 400 other investors that didn't end up investing with you, they saw that you made it work, you closed the deal, they saw the progress of the overall investment. So you really proved what you were doing immediately to all of them. So the pipeline was set very well. The stage was set for future investments.
Yeah, I think that's a big thing too, is like investors like seeing deal flow, and deal flow in the sense of, yeah, you're bringing them options to invest into, but more importantly, you're getting shit done. They like seeing that in terms of a deal opening up and filling up from a scarcity standpoint, right? They like seeing that you're getting more stuff done. There's a massive power in indifference, right? And when I say indifference, I mean, I don't care if this person invests. Not that I don't care about them and making sure they're putting their money in the right places for themselves, more so that we're going to figure out a way to get this deal done with or without them, right? So it's nice in the sense, like I've never once pushed an investor to invest. Right, kind of how I frame it on calls is, my job is to keep all the information that we have, so you make your decision whether you're in or out. I'm not going to push you either way. I might recommend some stuff to you based on your criteria, because we do different types of deals that may fit better for what you're looking for. Well, I'll never push anyone on an investment, right? And that power of having the network now to not have to go push someone, right? Like think of the end of the quarter in a sales role, like you can tell when that rep is not at their quota, whether you're having conversations with them, right? Because they're pushing, they're driving. I think here, getting to a place where you don't need that investment makes you, like, it's a whole power dynamic shift, right? Where you can be much more helpful to them if you're not forcing them for a personal gain, right? So I'd rather tell an investor no, or rather tell an investor this isn't for them now, and make sure they end up in the right place for them. Whereas before you may have pushed a little more, I think now you can take a step back and really be an advisor to them, right? And a partner versus someone looking to fill a number.
I 100% agree. And I think especially in the environment we're in right now, I see actually quite some syndicators kind of bashing the stock market. And I'm like, I get it, guys, but don't advise anybody to pull out of their portfolios now and transition into your deals, please. You're still an advisor to them, and you want to make sure you're taking care of them in the long term.
I don't necessarily agree with that. I mean, I have no money in the stock market personally, and I tell people, like, I always give context before I give information, right? So like me personally, I have zero money in the stock market. I'm in 35 plus, different private placement type projects, from multifamily to self-storage to short-term rentals to mobile home parks. So I give them my context, and I've shared along messages for partners I have that are financial advisors. Kind of what I've always tell people, I'm like, if you don't plan on keeping your money in the stock market for 5+ years going forward, there's no guarantee it's coming back up to where it is today, right? Which is an entirely fair statement. But I've never told someone, hey, you should go liquidate your portfolio. But I'm saying if you're not viewing it as a totally long-term approach, right? Keep your money in there holds risk of losing capital, which is a very fair statement to go say to tell someone.
To some degree, but at the same time, let's say somebody is very heavily involved in any of the tech ETFs, and if they pull it out now, I think the risk of losing principal is significantly higher than kind of sitting this one out. And yes, maybe shifting the overall focus to real estate, but I wouldn't advise them to pull out anything in their portfolio that might be significantly underwater.
Yeah, and it also matters too, kind of where their overall stance is, right? Like if they're just kind of waiting until it pops to a certain amount to go liquidate, I think a lot of people I've spoken with recently are more so kind of waiting for it to pop back up a little bit where they can go dump all of it and be done with it, right? I think a lot of people, the volatility, especially age demographic wise, if you're in your late 50s and you're kind of retiring on standard time right now, it's a tough position to be in for your timeline. I think kind of all matters as to what their goals are.
I mean, obviously it's part of what their goals are. But my general take on it is I want to act in the best interest of our investors always, even if it means they put their money somewhere else or keep their money somewhere else for now.
Sure.
And we don't have their money in our deal. That's kind of my take on that. And I think it overall aligns with your philosophy on, taking care of people in the long run.
And I think it matters too, right? So like there are scenarios in which I've told people they should go liquidate their portfolio, and I entirely stand by it, right? Say for the example, you're talking to someone who's 60 years old, they got a few $1 million there, and they're like, okay, we need $200,000 to go live on right now, right? When I know I can get them there today from what they have, and they have no risk of getting there, I will tell them to do that every freaking time, because that's their goal. If they can go meet that objective, it allows them to go live for the foreseeable future in doing so. I have no problem saying this is what I recommend you doing versus your portfolio today. That may or may not fluctuate and get you below that watermark where we can get you that cash number you need, right? In that scenario, all day long, I have no problem telling someone that.
Obviously, you can't make any guarantees. There's also risk involved in the investments you and me are placing, but it's probably significantly less than what we're seeing in other assets, which is why we're here. So talking about assets, you mentioned that you're invested in multifamily, short-term rental, and mobile home parks. So maybe let's get a little bit more into mobile home parks, because it's one of the topics we haven't discussed too broadly here yet. So give our audience some insight on what are you doing there.
So mobile home parks, we actually shift to a longer term hold period, right? And the reason we do that is most deals we do in multifamily are, a 3 to 5 year model, but we've been selling them in less than 2 recently, right? Mobile home parks, we're going to look at a longer term horizon. And the reason we do that is that a lot of the parks that we buy, they're tenant-owned parks, which means the tenants they're park-owned homes, which means that the homes in the park, we actually own them going into it. So what we'll typically do is we'll actually sell off those homes to the tenants. So if you look at the operating cost, you essentially have a land lease, right? Because you own a plot of land, their home is parked on, and they're paying you rent each month for doing so. So you look at your operating costs, very, very low. You look at your turnover, very, very low. Multifamily, you're anywhere between 45 and 55% each year in terms of turnover, right? People moving out and leaving, right? Lesser in larger units, more in studios, right? So kind of 1 and 2 bedrooms kind of in that range. And turnover costs are expensive, right? To go, especially for long-term holds, right? To go paint the units, get them ready. You have your downtime of releasing, your cost of releasing, etc. In mobile home parks, your OpEx is so low, and then you also have your turnover is sub 10% in good parks every single year. So people are staying for a long period of time. And also you kind of move one of those homes, that's $5,000 if your home will even make it to go move. So what it really incentivizes is that people take care of their communities there once you kind of clear out some of the riffraff they may have inherited, right? Once you build a community that shows you really care about the residents, they reciprocate in a big way, right? You're building a place they want to stay for a long time. They view it more of home ownership versus a rental, right? Because they actually do own that home, even though they lease the land. So for us, it makes a lot more sense to go hang on to them longer. Also, there's a few plays in mobile home parks that are very impactful for people like you and myself, right? We actually get the most operators investing into our deals in mobile home parks versus retail investors, right? Typically, my philosophy is someone's doing deals themselves, they're very not likely giving you money for your own deals. Mobile home parks are the only scenario in which they actually seem to be very interested because the depreciation is so high. So very high depreciation, longer term holds, so your recapture is further out in depreciation, and also there's very strong cash flow, and there's a big value, right? So kind of look at it. Multifamily, very institutionalized. Self-storage, not too far behind. Mobile home parks kind of next up. And what you see in most mobile home parks, there's smaller deals, right? You very rarely see a $100 million mobile home park. I haven't seen them personally yet. They may be out there, but I haven't seen them personally. And so institutional investors want to go write checks for 10, 15, 20, 30, $40 million. They need a combined portfolio of assets. So it's more of the consolidation play. So if we can go stack up enough communities and portfolios in a given area, in a given MSA, your cap rate aggressively compresses when you look at both refinances and also institutional exits. So you're getting inherent value by consolidating portfolios of mom and pop owners for an institution to come in and buy in the future. So we
Yep.
see value creation by just doing that.
Yeah, so by simply allowing tenants to take over the home ownership, they also take better care of the overall community. So you're actually making a transition from what might be a rather rough park into a more long-term kind of settled dynamic. And then by consolidating multiple parks, you're kind of preparing the road for institutional money to come in and take it over, because otherwise it would be way too small for them to even consider it as a transaction.
Exactly. Yeah. So we're seeing anywhere between 50 and 150 basis points of cap rate compression when you have over 1,000 lots, depending the MSA that you're in, right? Which
Yeah.
is very, very solid. I also think mobile home parks are great right now as they're higher cap rate type projects typically, at least when you buy one-off smaller assets. So the interest rate inflation or the interest rates going up right now that we're seeing impact things like this much less so, right? Because the cap rates are actually higher than interest rates still. Whereas multifamily, you're seeing cap rates lower than interest rates still in most markets that are larger institutional size deals.
I mean, I think especially in the current environment, there's a lot of institutional money flowing in, but not only from the US, but also from other countries. Even sovereign wealth funds are going after the multifamily market in the United States.
That you've got EB5 money that always has to go place large checks. You've got institutional investors, pension funds, and even though if yields have gone down recently, right, interest rates have gone up, cap rates have compressed the last few years, so yield actually has become lower. It's still very difficult to go write a check for the dollars they have to go place in any other asset class than this, right?
Yep.
And they feel it's a good hedge against inflation. So I think we still have my take, not a financial expert, but kind of my take. I think we'll see stuff stop trading for a bit multifamily, right? We're kind of sellers and buyers have to go readjust to what pricing looks like going forward. And I think we'll see interest rates drop back down again sometime in the next 2 years, right? Once the Fed realizes they're forcing into a recession, when all the market fundamentals besides supply and besides, it's really just supply, right? The market fundamentals are great outside of supply. They're kind of forcing a recession on us right now as well that I think will pull back from pretty big in the next anywhere from 12 to 24 months when looking at interest rates. Just my take, my guess. When that happens, I think we'll see compression again in most asset classes as well.
Yeah, I think we're already seeing that. Like in the last month, there have been significantly less offers on properties in the multifamily space compared to before. And even in a single family housing space, there's a lot less mortgage underwriting going on. So there is a big pullback already just in the last couple of weeks.
Yeah, so you can look at it from a few angles, right? One is that say a person who's got X budget to go spend in their monthly mortgage, their affordability keeps going down. Even if prices stop rising as quickly in single family, I think they'll keep going up in most markets that have good demographics, but at a much lesser rate. But with interest rates going up, that mortgage is rising their payment, which means they can then afford less house or they can't afford to qualify for a house they want to live in at all. What that then does is people then are now forced to be renters in places like apartments. So we'll keep seeing apartment demand go up. I think most construction of new builds right now is kind of in the Class A type category of apartments, where workforce housing will be very valued, right? You have to get $3-4 rent right now per square foot to go justify building new product in a tier 1 market. So it makes it really tough to go do so. So I still believe there's a level of insulation in that as well.
Yeah, I think we're in this particular year, we're still 5 million units short in the United States. And given that we're, I guess, in a recession already, a lot of that actually kind of solidifies your theory about mobile home parks. There is an overall shortage, especially for affordable living. And mobile home parks are also scarce because they're not being zoned.
They are, yeah, because you have all the NIMBY laws and not in my backyard. People don't want mobile home parks being built for new units of housing in their areas. So you have that side of it, and you also have that land basis can typically be turned into housing or apartments that are worth more per unit looking at the land. So actually I think we'll keep seeing a scarcity of mobile home parks, right, and lots for them, both mobile home parks and RV campgrounds. Some RV campgrounds are kind of long-term, tenant who's there for a year plus, right? So I think we'll start seeing, more compression there going forward, just because of affordability, but also because of just scarcity of supply.
Yeah, so that really kind of backs up your entire theory about that. It's a great investment, especially for people like us who are always looking for depreciation.
Yeah, I mean, that's where the bulk of my dollars this year are going to, right? Kind of before, up until this year, it's about 80-20 multifamily and other. Now I'm talking about 60-40 multifamily and other being short-term rentals, mobile home parks, self-storage, etc.
One of the final questions I usually like to ask is, what does it mean for you to have a life well lived?
I think that ties to a few different things. Where I'm a big believer is when you get towards the end of your days, you kind of see, okay, you could have been this and you ended up here. And that gap, and that can be things like relationships, legacy you leave, financial, all, whatever it may be, right? It's some combination of all those things. That gap will haunt you. So for me, I try to view it as, how close can I get to pushing that top boundary of who you can be as a person, both in terms of financial success, business success, but also all the personal sides too. But I think life well lived, if you want to sum it up, it's you can do what you want, when you want, with who you want to. That's the biggest thing, right? Of not being forced to do things that you don't enjoy doing. For me, there's certain calls I'll see in my calendar and I'm like, fuck. Right? Or certain people call you and you're like, I really don't want to take this call, right? Your whole mood just drops. So just being able to kind of build a lifestyle by design, and for each person that's different. So it's kind of figuring out what those things are for you. If you don't have it figured out yet, I don't have it figured out yet at all. It's building a way that'll give you the optionality to do that when you figure out what that is.
Yeah, couldn't agree with. Sam, thank you so much for your time. Where can people connect you if the audience is interested in mobile home parks or anything that we spoke about? Where can they connect with you and find out more about what you're doing?
Yeah, so I'm super active on LinkedIn. My website is silvermancapital.co. And then email is sam@silvermancapital.co. So super active on LinkedIn, and then always available for emails, calls, etc.
He's literally super active. He will reply in minutes.
Yeah, those phone notifications do justice. Responding is half the battle.
Yeah. Awesome. Thank you so much for your time and, sharing your insights on different asset classes. And thanks again for making it.
Yeah, thanks for having me on. I appreciate it.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.